The Fed may be at the end of its tightening cycle, and with that, we could see massive changes in rates for savers, including the really great MYGA rates we've been enjoying for the past 6 months. Hi, and welcome back to Stop Being Sold. My name is Michelle, and I'm here with Brian, and in today's video, we're discussing why right now may be the best time to lock in a MYGA or a multi-year guaranteed annuity, and why if you wait, you may not see rates this good for a long, long time. So Brian, let's get to it.
Okay, so there's a few reasons that now is the best time to lock in rates. The first one is that with interest rates rising so quickly in the last 12 months, MYGA returns are the best we've seen in a long time. Think about this. 10-year Treasuries have doubled from 2.1% to a high of 4.2%.
Okay.
2-year Treasuries have risen from 2.17 to a high of 5.05, and MYGA rates have run from 2% to a high of 5.7 to 6% right now.
Got it.
And here's a note. MYGA rates tend to track other rates, whether they're rising or falling. Okay. So that leads us to number 2. In the last week, we've seen 2-year Treasuries drop 20% from 5.05% down to 4.02.
Landslide.
Yeah, what a slide. And then also 10-year Treasuries fell over 15% from 4.07 to 3.42. Again, MYGA rates tend to track rates, whether they're rising or falling. So when Treasury notes go down as fast as what just happened,
And
MYGAs often follow that.
Okay, got it.
And the third reason is because with this week's recent banking crisis, there's a real possibility the Fed may stop raising rates next week.
Right.
The Fed was on track to raise another 50 basis points next week, but with Silicon Valley Bank failure, the seizing of Signature Bank, what's going on with Credit Suisse Bank and First Republic Bank, and the instability of the banking sector at the moment, it's looking like the Fed will have to either take a pause with raising rates or maybe even hold off altogether. Odds are the Fed will have to start lowering rates sooner if the banking crisis spreads.
Well, we'll see about that. So, question, if the Fed does pause rate hikes or begin to lower them, how fast can this change MYGA rates? Like, how long do people have to lock in their current rates?
Okay, so if rates would move dramatically lower, you would see insurance companies set an actual time frame to lock in the rates. This is very common. Happens all the time. You'll need to have your application to these companies by this date if it actually does happen. So sometimes you'll see it advertised. They do this all the time. There's a fire sale just to lock in these rates. So
question, that fire sale verbiage, is that your cue that rates are about to change and fast?
Yeah, usually what's happening behind the scenes, Michelle, as an actual advisor, I would get the notification from the insurance companies ahead of time before ads go out, saying, here's our date. Like, what is today? The 16th. So March 31st, you got to have all your funds in by this date or the rates drop into this. And they'll let you know. And they'll stagger them down too. So if rates move slow, they'll start dropping them like 10 basis points, 25 basis points. So once you start that downward slide, we may see them start to move. So.
Got it. Okay. So we talked a little bit about how Treasury, when rates are going down, it tends to bring MYGAs down with it. Can you talk to us a little bit more about how MYGA rates are actually determined?
Yeah, there's a couple different factors that come into play for insurance companies when they determine MYGA rates. First one including is interest rates.
Right.
They're influenced by the current interest rates in the market. If rates are high, MYGA rates are likely to be higher as well, and vice versa.
We're seeing right now.
Yeah. So also, rates can also depend on the length of the guarantee period. MYGA rates typically offer a higher rate for longer periods, but current shorter-term rates are actually higher than long-term rates because short-term Treasuries were higher than long-term Treasuries, which in turn is what potentially caused the run on the bank on SVB.
Yeah.
So, and then also, it also comes down to the insurance company. It could their expenses. Insurance companies have to consider their own expenses, their administrative costs, their marketing expenses when they determine MYGA rates. So
All right.
Currently, there's a flight to safety, and when Treasuries are being bought for safety, rates will naturally fall. Thus, rates on MYGAs may follow pretty soon. So,
which is why we're doing this video. If you're interested in a MYGA, lock that in sooner rather than later. Here's the thing. If you want to know more about MYGAs, we're going to drop a video below, pinned comment, and in the link, there's a link in the description that explains everything that you need to know about MYGAs. It's, like I said, it's down there. Go check that out if you're interested, because Brian, it's a pretty long video, but it goes into the pros, cons, everything you need.
Very detailed.
Exactly. All right. So anything you want to add before we wrap this up?
Yeah. Remember though, MYGAs are fixed rates. They're fixed for a guaranteed period, and they don't fluctuate with market conditions. But make sure you read the contract, read the guarantee and the rate before committing to a MYGA contract. Also, one thing we've mentioned on this channel all the time, never put all your eggs into one basket.
Exactly. All right. On that note, if you like the content of this video, hit that like button, help us grow this channel. Leave us comments if you have questions. And also don't forget to subscribe. Brian and I put out videos on the daily that help you make the best decision for your financial future. Yep. All right. Thank you, Brian. And thanks so much to everyone who watched.
Thanks, everyone. Have a great day.